Hey guys, just want to show you the indicators I'm using when I'm looking at charts for crypto. I'm not saying you should use these, I'm not saying that you should follow these blindly. You do what works for you. This isn't advice or anything like that. I'm not telling you to do anything. I'm just showing you what I use and what I find works for me. So let's get to it. So I've got a couple indicators here. I've got two MAs, the Ichimoku, RSI, the Stochastic, and the MACD. Okay, I'll go through each one, and they're all good indicators. And if used appropriately, then it should help increase profits. So first off, let's look at the Ichimoku. Okay, um, so just here. The Ichimoku I've got on a 52 baseline. Don't worry about the others because you turn them off. Otherwise, it kind of looks a bit like this. And it just confuses you. So let's break it down nice and simple. Okay. So I've got the lagging span on. I don't really use it. I just have it there. I could turn it off if I wanted, to be honest. In fact, let's go ahead and do that now. Okay. Got to click OK. There we go. So first things first, let's look at this baseline. Okay. Now, baseline is this white line here. When it's below, it's kind of bearish. You don't really want to trade. When it's above, it's bullish. That's like you can either on a downtrend, you can either what's the word? I'm trying to think on the spot here, and I've got ME, so I get my words mixed up. It's not great. I do apologise. What's the word? Short it. That's it. So you could short it when it's below if you wanted, or just not trade. Remember, you don't have to take every trade. So what you'd be looking at is for when it crosses over here. Now this isn't a good crossover. Let me draw the circle. Okay, so it's crossed over there, and it's not really doing much. It's come back down, and then one little green here. You kind of think, oh, maybe, but the next one it's coming back down under, so you wouldn't do it. Okay, what you're looking at for confirmation is this. Okay, so the difference between the two there, I know, like, it's two red candles, green candle, green candle. Okay, at the distance of the baseline from the candle at the same time. Okay, so here it's gone above and it's closed. Now here it stopped above, and it stopped above here as well, but then it's risen up. So this is where you'd buy in, sort of around this area. Okay, if the second candle if the wicks haven't come below the baseline, it's generally a good sign. You know, if it, and that's sort of where you'd want to buy in. So let's have a look. So realistically, you know, we'd probably FOMO in and buy in around here, and if you played it to the top, happy days, you just made yourself 7%. Okay, ideally what's going to happen though is you probably buy in around about here somewhere, and if you sold at the top it's 6%, but down here you probably sell around about here to take profit. It's about 5%. Okay, so that's a little indicator. Now that's not a great example, that's only 5%. You want to make more. So let's have a look back here, shall we? Last time it crossed over just here. So here is perfect for an entry, according to the baseline. Okay, so it's crossed over and it's confirmed straight away, green candle. So then that's sort of where you'd probably want to buy in. You probably would have bought in around here somewhere, and it would have dropped, and you'd be like, oh no, but you know, the indicator's there. And that, let me hold on. So look at that run from where you bought in. Now, if you've got hands of steel, you bought in round here and sold up round here somewhere. That's 30%. You know, that's on Bitcoin. That's pretty good. Now, because we're human, we've got the highs and the lows. You know, we probably would have. What did we say? Buying there. Probably would have sold round here-ish when we've seen it start coming down. That's 20%. But if you have a stop loss, okay. So this blue line is going to be stop loss. It's not straight. I don't apologise. I'm trying to keep it short. So your stop loss around here, you would have set to when you entered. You'd want to set it to just below the lowest of the most recent candles, which would be here. Don't want it just there. That's too close. Bit lower. It's not a great stop loss. You'd have bought in around there. So that's like 2%. Okay. Now it's easy to say all this from historic charts, but the proof's in the pudding. Okay. So now as your trade grows, so once you've got your first 10%, about there, you want to move your stop loss to there. So you've secured some profit. Okay. You're not losing out too much. You know. There's 10%. So you'd have secured just underneath that wick there, just in case it decides to run. You're still in profit. Profit's profit, guys. Doesn't matter how big or how small. Okay. So as that's gone up, okay, you're suddenly there. Okay, but then you're followed by a big red, well, not a big red candle, but you're followed by a red candle. What you do, you've got your stop loss down here still. Just shift it up. Now, just pull it just below this wick. Okay, that's the lowest of the most recent wick. I mean, you can put it wherever you like, but if you want to make sure you don't get stopped out without giving it a fair chance, just pull it below that wick. Otherwise, shift it up, you know, to the close of the candle. So again, straight away you've secured 15% profit there, and it allows for a bit of volatility, which, as you can see, happened. Now you're asking, why wouldn't you have just sold around here? And I'll tell you why. This is where the moving averages come in. Okay, so my green moving average is a 25-day. Okay, so you'd have bought in around here. It's above the 25-day. Great. The 25-day is still below the baseline. Okay, so it's not quite decided what it wants to do, but it's moving up. You know, you'd have bought in around here, it started going up. So you're still in profit, so you're letting it play, and then just here it's crossed above the baseline. Okay, so you're like, great, happy days. You know, it's good confirmation that it's gonna run. There's a bit of ooh and nah in here, nothing really to worry about. And again, it's crossed here. Now here, I'd probably be a little bit worried, but it's still in an overall uptrend, so don't worry. Okay, it's crossed again here, which confirms that it's going to keep running all the way till it hits this big red candle here. Your stop loss here. You've allowed for a bit of volatility, whereas securing profit. Now at this point, if you've still held and you're not sold, okay, hold on, you're securing your profits as you go. Okay, so if you've still held past this, great. Past that, great. Okay, now it's started going up again. So it's still, the MAs are still showing an uptrend, the baseline's still showing an uptrend. Okay, the candles are still above. So let it play. There you go, there's 30% if you've got in round about there. and you can just move that up. That's your stop loss. Just move it up. You're securing your profits and you're allowing it to run. So from here, you've got in from there to your stop loss. That's 20% profit just from that simple signal. Okay, I don't think anyone could really fully predict that big wick right there, but it happens. That's why you have stop losses. Now it's kind of come back up against the MA there, so you wouldn't want to worry too much. But this, where the red line is, okay, this is my 7-day MA, and this is my sell indicator. Okay, normally when it hits a red candle, I'd sell. So I would have sold around here primarily, or at least move my stop loss up. Okay, and if I've moved my stop loss, I would let it play because I'm safe. Yeah. But if I wanted to sell, that's sort of where I would sell. But as you can see, it switches back under the candles and then goes over. When that comes under, just let it run. No harm in it. As soon as it switches like this is sort of where you want to sell. Okay, so if you're watching that, I mean, you're never going to get it bang on, but that there is a huge sell signal. So it's gone right up above the red MA, and then it's come back down and crossed over. I mean, I would have definitely sold as soon as I saw this here. That's pretty big red candle, really. 3%. You know, if you're leveraging, you know, it would have put you off. You'd have probably sold, but that's fine. You still made money. Could have bought up again down here, and you're happy days. You know. Again, confirmation to buy would be when it come up above the baseline. Okay, follow it. It's still following up on the baseline. Happy days. Comes back down a little bit. Some wick offs here, but again, above it runs. Nice and simple, huh? So yeah, that's how I use the Ichimoku Cloud and the MAs. They're good indicators, but you often find that you're late to a party. For example, when it crossed over here, okay, if you rebought back in here, let's say you bought in there, made 6%, but if you'd bought in down here, that's 10%. You know, so it's not going to be perfect like that, and you're going to be very limited for your setups. You're not going to find good setups all the time. So here comes the RSI. Okay, now the RSI normally has 70 and a 30 to show overbought, oversold. Okay, and that's where people go wrong. The RSI is just a trend line indicator. Okay, that's how you want to see it. So bearing that in mind, it's got 70 and 30 on an upper and lower limit. Inputs, I've got it on 14, but just change the price line to 50 on the upper limit. Okay, and turn all the others off. Don't need to worry about it. Okay, and the reason why I say that is because that's your trend line. Okay, from 0 to 100, 50's your middle. When it's below 50, it's a downtrend. When it's above 50, it's an uptrend. You know, I mean, how simple is that? You know, downtrend, downtrend, uptrend, uptrend. You know, but you can't trade off that. It just gives you a little bit sort of an idea. You know, so at the moment, Bitcoin's below the baseline. It's below the 25-day MA. I wouldn't look at going long here. You know, especially looking at the RSI, it still shows it's in a downtrend. Why would I open a long? Okay, that's what I'd see. But you can't fully trade off that. So let's have a look at the stock. So the stochastic, now I've got my 70-day and my 30-day. Okay, 70-day and 30-day. Sorry, 70 and 30. So they're the average values. Above 70 is overbought, below 30 is oversold. Okay, so at the moment, going off the first two, I wouldn't buy, okay, because it's in a downtrend. Candles show it's a downtrend, but it's oversold. So if it's oversold, it can only really eventually go one way, and that's back up. People are going to want to buy it again, aren't they? So yeah, there you go. I mean, I still wouldn't, because I've got 1, 2, 3 indicators telling me not to, and I've only got one saying, well, you know what, it's going to go up. You know, but three against one. That's why you sort of use different indicators to help you trade. Now let's bring in the MACD. Okay, and I'll pull all this together in a minute so you can understand. This is just a way of keeping it very simple. It's probably not how they're meant to be used, I don't know, but this is what I'm finding is working for me at the minute. Maybe I've got things completely wrong, in which feel free to leave comments below to help me understand. But I bought the MACD in. Now the MACD default values are terrible. Okay, so I've changed the fast to 8, slow to 21, and signal length to 5. I got those values from a different video when I was looking at how to use MACD. Okay, but let's keep it simple. Okay, so now the MACD, the histogram is more what you want to look at. It gives you a better understanding than all this. Okay, so if you look at these lines here, it still shows it's in a downtrend, but not much movement, whereas the histogram shows it's starting to come back up, but it's not flipped yet, has it? So I still really wouldn't buy. I've got 3 indicators here saying it's sort of turned into a downtrend. The RSI is below 50, so it's in a downtrend, but the stock's oversold, so that looks like it will go up, and the histogram started coming back up, but it's still in a downtrend. Why would you buy? Okay, now let's throw all this together, shall we? And a good way to show you is from history. So let's go back to where this previous run started, back here, which is in January, February, March, April, May, June, July this year. Where I said if you bought in here, looking at the baseline and the confirmation over here, then yeah, great, happy days. Now, the RSI just here, like 4 hours before it crosses over, it shows that it's suddenly just tipped into an uptrend. Hold on, it went into an uptrend, but then dipped and slightly more here. So that's showing that it's got the support. Sorry, I've got a dry throat. So it's building support there to start running. Okay, but it's not quite got it. And then here, it's tipped back over again. Let's have a look at the stock RSI. So it's fluctuating between. I wouldn't pay much attention to the middle, not for what I use it for anyway. But just here, it's dipped into the oversold. Okay. Once it's oversold, it can only start coming back up. So it started coming back up in the next 4 hours, in which it's just peaked over. Okay, but it's suddenly gone into the overbought, but not fully. Okay, so I kind of see these as a 50-50. That's how I see it. I like to keep things simple. It's probably not what they're meant to be used for, but this is what I use it for. So yeah, it's building the support. It's not quite there, and then it's sort of flatlined. It's built a bit more support there. Again, nothing really to shout about. But just here, there's your confirmation. Okay, so it's crossed the baseline. It's shown on the RSI. It's gone into, so it's crossed the baseline here. the RSI shows it's gone into an uptrend. Okay, the stock, it slightly shows it's gone into the overbought zone, but you know that's multiple signals there showing you that now's a good time to buy. Okay, and then the MACD. Let's have a look at MACD. So let's enlarge the MACD a little bit. We're back here. Sorry. So the MACD. Let's have a look. It's generally been flatlined. It's just tipped over, so that there's a little bit of confirmation. Again, as I said on my previous indicators, this was the real confirmation for me. It was just here that it would be running. Okay, so where the 25-day crossed the baseline shows it's going into an uptrend. Okay, so look at the RSI, still showing that it's in an uptrend. It's above the 50. Okay, let's have a look at the stock. Here we go. Still showing slightly overbought, you know. So you know you can expect a little bit of downplay, which is what happened here. Yep, as you can see, still showing overbought. Went into a bit of a downtrend just here, but then shot back up. And then on the MACD, on the confirmation, there we go. So the confirmation's a little late to the party on the MACD there, because I've already got the confirmation on the previous two, but on the MACD it's suddenly shown that it's going into a bear. What happens after the confirmation? A couple after, starts going into a bear, but then it flips back over. So this how I use it. I'm trying to keep it short, trying to compress it. It's probably not what the indicators are meant for. You know, I haven't been to college or anything like that, but kind of looking at the history of charts, this is what I see. This is what I sort of use multiple indicators and to get my confirmations. Of course, like you know, I'm fully interested in learning how to use these properly. So let's go to where Bitcoin is currently today, right now. So it's still below the baseline, below the 25-day MA, showing it's bearish in a downtrend. Sorry. The stock is showing it's oversold, so it can only really go back up. And the histogram is showing on the MACD is showing that it's starting to come back up. Is it going to flip? Don't know. Got 3 confirmations that it's in a downtrend. One showing it's oversold, so it most likely go back up. I mean, once something's oversold, I mean, people have got to rebuy it technically, don't they? And the histogram is also not too bad. So it's good to try and keep an unbiased view. Use your stop losses. Okay, so if you bought back in around here and you sort of let it play, as soon as this candle happens, you want to move your stop loss. You know, I mean, you'd wait for this candle, see where this one ends, and then you'd move your stop loss to wherever you're comfortable. So if you moved it just below that wick, for example, you wouldn't have made a great deal off this. Let's have a look. Off there, 6.4, you made 4.7. Let's have a look. So when it's crossed, it's gone back into an uptrend. Okay, the stock is confirming the uptrend, showing it's slightly oversold. So you can expect it to come back down at some point, which it did over here. And the MACD, you can see the flip over there. So where it's gone down, come up, but only slightly, and then it's come up again, come back down. So yeah, I hope I've sort of explained that a bit easier for you guys if you don't quite know how to use these indicators. This is how I use them. They might not be the correct way, I don't know. But yeah, different ways to see how it confirms. If this has helped or you found it interesting, I know my voice isn't great, sorry about that. If you found it interesting, hit subscribe, and I'll try and get some more videos up at some point. Possibly going through charts. Never know, I might do some live streams of the charts. And if you find it extremely useful, feel free to donate. Have fun.